Hey everyone, welcome back to Corporate Decoder. Today, Realty Trust just filed an 8 announcing an increase to their share repurchase program, and I am seeing a key signal about their confidence. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is essentially buying back more of its own stock, and that tells us something important about what management thinks the stock is worth. Realty Trust, Incorporated, or AHRT as it is known on the stock exchange, is a real estate investment trust. Think of them as a company that owns, operates, or finances income. Generating real estate, they've got a couple of different types of stock out there, including common stock and a preferred stock with the ticker AHRT-PA for context. We've recently seen news about their quarterly dividend announcements, and even a move to simplify their business by shedding a construction arm. Large institutional investors like the AHRT Trust Preferred and Income Securities ETF and Cohen and Steers Quality Income Realty Fund Incorporated hold significant stakes, showing that big players are watching this company. The big news today comes out on May 13th, 2026. The company announced they are boosting their share repurchase program. This means they've decided to put more money aside to buy back their own shares from the open market. This isn't just a small tweak either. They are adding an extra $50 million to the program. That brings the total amount they are authorized to spend on buying back their own stock up to $100 million. Now, they have already used up some of the original authorization. As of the announcement date, they had about $39.7 million already spent on repurchases. So, after this increase, they have around $60.3 million still available to spend on buying back their shares. This repurchase program can apply to different types of stock, like their common stock, which you usually see traded under the ticker. They also have preferred stock, like the 6.75% series accumulative redeemable perpetual preferred stock, which trades under AHRT-PA when a company buys back its own stock. It can have a few effects. It can reduce the total number of shares outstanding, which can then increase the earnings per share for the remaining shareholders. It also signals that management believes the stock price is attractive and a good investment for the company itself. The fact that they are increasing the buyback program, especially when they have a preferred stock that pays a fixed dividend, often suggests they are confident in their ability to fund both obligations. It's like saying they have enough cash flow to cover their dividend payments and still have money left over to invest in their own stock, which they see as a good deal. The buyback itself isn't a guarantee. The company states that these repurchases are subject to various factors, including their available cash, the overall market and economic conditions, and whether they see better places to put that money, like acquiring other companies or investing in new projects. They can buy shares through regular stock market trades, block trades, or even private deals. And importantly, there is no set number of shares they must buy back, and they can stop or pause the program at any time. This flexibility is pretty standard for these types of programs. Now, let's look at why this might be happening. Share repurchases are often seen as a positive sign. When a company buys back its own stock, it is essentially saying they think it is undervalued. It's a signal of confidence from the management team. For example, when Bed Bath & Beyond was struggling, they did have share buybacks at times. But it was often in a desperate attempt to prop up a falling stock price, not typically a sign of fundamental strength. In our Realty Trust case, given the context of other recent news like shedding a construction arm to simplify operations, this increased buyback could indicate a strategy to focus on core assets, boost shareholder value through reduced outstanding shares, and perhaps signal a more optimistic outlook for their main business lines. So what is the takeaway here? Our Realty Trust is putting more money towards buying back its own stock. This generally points to management believing their shares are a good investment at current prices. It's a move that could benefit existing shareholders by potentially increasing earnings per share. We have to watch their liquidity and external economic factors, but the signal here is one of managed confidence. The biggest question I have is what this means for their strategy going forward. Are they seeing limited growth opportunities elsewhere that makes buying back stock more attractive? Or is this purely a valuation play? The fact that they are increasing the authorization by a significant amount suggests they feel the current stock price is a compelling entry point for the company itself. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, give it a like and subscribe for more, and join our Discord community linked below.